If you're holding Palantir Technologies right now, don't treat it like just another ticker in your portfolio, because what you're actually looking at is a signal. And in investing, signals matter far more than noise. Most people spend their time reacting to headlines, price swings, and social media hype, but the real edge comes from recognizing when something deeper is shifting underneath the surface. Palantir sits right at the intersection of one of the biggest shifts we are seeing today: the transition from a world driven by physical assets to a world driven by data and intelligence. Think about how value has evolved over time. Decades ago, it was oil. Then it became internet platforms. Today, it's data, specifically the ability to take massive amounts of messy, unstructured data and turn it into decisions that actually impact the real world. That's where Palantir operates. And this is why it's not moving like a slow traditional company. It behaves differently because it's positioned differently. When companies are at the center of a structural shift, they don't grow in straight lines. They move in bursts. Periods of quiet are followed by sharp repricing, and if you're not paying attention, you miss it. This is where most investors get caught out. They look at a stock like Palantir after it's already moved and think, I've missed it, or they see volatility and assume something is wrong. But volatility in companies like this isn't always a red flag. It's often a reflection of uncertainty around something that the market hasn't fully understood yet. And uncertainty is where opportunity lives. The market doesn't reward comfort, it rewards clarity before consensus. What makes this even more important is the type of clients Palantir works with. We're talking about governments, defense agencies, and large enterprises, organizations that don't experiment lightly. When they choose a platform, they are making long-term, high-stakes decisions. So when you see adoption happening here, it's not casual, it's deliberate. That's a completely different signal compared to a trendy app gaining users quickly and losing them just as fast. But here's the part you really need to internalize. A signal only matters if you know how to interpret it. Owning the stock isn't enough. You need to understand why you own it. Otherwise, the moment volatility hits, and it will, you'll start second-guessing your position. This is where informed investors separate themselves from reactive ones. They don't just see price movements, they connect them to business fundamentals, industry shifts, and long-term positioning. Right now, Palantir is sending a message to the market. It's saying that the demand for real operational AI and data-driven decision-making is not theoretical, it's happening. The question isn't whether this space will grow. It's who is best positioned to capture that growth. And when the market starts to agree on that answer, pricing doesn't adjust slowly, it adjusts fast. So if you're a shareholder, this isn't the time to switch off. This is the time to pay closer attention than ever. Because moments like this don't just test your patience, they test your conviction. When you look at Palantir Technologies, the biggest mistake you can make is trying to fit it into a typical tech stock box because it doesn't behave like one. Most tech companies sell tools. Palantir sells outcomes, and that distinction matters more than people realize, especially when you're thinking about long-term value. At its core, Palantir's business model is built around solving extremely complex, high-stakes problems. Its platforms, Gotham, Foundry, and AIP, aren't just dashboards or analytics tools you log into once a week. They become deeply embedded into the operations of the organizations using them. We're talking about systems that help governments manage national security, track threats, optimize military logistics, or help corporations streamline supply chains, reduce costs, and make faster decisions. This is mission-critical software. And when something becomes mission-critical, it stops being optional. Now, here's where it gets interesting from an investing perspective. Once a company or government adopts Palantir, switching away isn't easy. It's not like changing your email provider or swapping out a CRM tool. These systems are integrated across multiple layers of an organization: data pipelines, workflows, decision-making processes. That creates what we call high switching costs. And high switching costs are one of the strongest competitive advantages a business can have because they lock in customers over the long term. This is why Palantir's revenue profile is so different. It's not just about acquiring new customers, it's about expanding within existing ones. A client might start with one use case, and over time, that relationship grows into multiple deployments across different departments. That expansion drives recurring revenue, and recurring revenue is exactly what the market rewards with higher valuations because it brings predictability. Another thing to understand is how Palantir approaches growth. Unlike many tech companies that prioritize rapid scaling at all costs, Palantir has historically been more selective. It doesn't chase every customer. It focuses on the ones where its software can create the most impact. That can make growth look slower on the surface, but it often leads to deeper, more durable relationships. And in the long run, durability tends to outperform speed. there's also a strategic angle here that most investors overlook. Palantir sits in a space where very few companies can compete effectively. The combination of handling sensitive data, working with governments, and building highly customized solutions creates a barrier to entry that isn't easy to replicate. It's not just about having good software, it's about trust, security clearances, and years of proven execution. That's not something a new startup can build overnight. But let's keep it balanced. This doesn't mean the business is risk-free. Because Palantir operates in such a specialized space, expectations are high. Investors expect consistent growth, strong margins, and clear evidence that its commercial business can scale alongside its government contracts. If those expectations aren't met, the stock can react sharply. That's the trade-off. You get the potential for strong positioning, but you also get sensitivity to performance. So when you evaluate Palantir, you need to shift your mindset. Don't think of it as a simple buy or sell story based on short-term price action. Think of it as a company building deep infrastructure in a world that is increasingly driven by data and AI. The question isn't just whether it's growing, it's whether it's becoming more embedded, more essential, and more difficult to replace over time. Because if the answer to that is yes, then you're not just looking at a tech company, you're looking at a business with the potential to compound value in a very different way. Now, this is where things start to accelerate, because when you bring artificial intelligence into the equation, you're no longer just talking about steady business growth. You're talking about a potential inflection point. And with Palantir Technologies, the key difference is that it isn't trying to convince the world that AI is important. That conversation is already over. The real question now is who can actually apply AI in a way that delivers measurable results? That's where the gap is, and that's where Palantir is positioning itself. A lot of companies are still in the experimentation phase with AI. They're running pilots, building internal tools, or using off-the-shelf models that look impressive in demos, but don't always translate into real operational impact. Palantir's approach is different. It focuses on integrating AI directly into the workflows of an organization, meaning decisions, processes, and outcomes are influenced in real time. This isn't about generating text or images. It's about optimizing supply chains, predicting failures, improving logistics, and enabling faster, more accurate decision-making at scale. This is exactly why its artificial intelligence platform, AIP, has been gaining attention. It's designed to bridge the gap between raw AI capability and practical use. And that gap is where most of the value sits. Because having access to AI models isn't the same as being able to use them effectively within a complex organization. Data needs to be structured, permissions need to be managed, and outputs need to be tied to real actions. Palantir already has the infrastructure layer in place, so adding AI on top of that becomes a natural extension rather than a complete rebuild. From an investment perspective, this creates a very specific pattern that you should be aware of. When a new technology wave emerges, markets tend to move through phases. First, there's hype. Everyone talks about the potential. Then comes skepticism. People question whether it will actually deliver. And finally, there's monetization, where companies start generating real revenue from it. What's interesting right now is that Palantir appears to be moving into that third phase earlier than many of its peers. And when monetization begins, the market starts to reevaluate what a company is worth. Not gradually, but often quite quickly. That's because future expectations shift. If investors believe that AI-driven products can significantly increase revenue or margins, they don't wait years to price that in. They adjust valuations based on forward-looking potential. This is why you sometimes see sharp moves in stocks tied to major technology shifts. But timing matters. Being too early can feel just as frustrating as being too late. You might hold through long periods where nothing seems to happen, only to see sudden movement when sentiment changes. This is where patience and conviction come into play. If you understand the underlying business and the role AI is playing within it, you're less likely to be shaken out during those quieter phases. At the same time, it's important to stay realistic. Not every AI initiative will succeed, and not every contract will scale as expected. There will be setbacks, competition, and periods where growth doesn't meet expectations. That's normal in any emerging space. The key is to watch whether adoption is deepening and whether customers are expanding their use of the platform over time. Because ultimately, the opportunity here isn't just about AI as a concept, it's about AI as a revenue driver. And if Palantir continues to prove that its platform can turn AI into something businesses rely on daily, then you're not just looking at a company riding a trend. You're looking at one that could help define how that trend is actually implemented across industries. If you're holding Palantir Technologies, this is the stage where mindset matters more than momentum. Because by now you've heard the story, data dominance, AI integration, long-term contracts, but the market doesn't reward stories alone. It rewards execution, and more importantly, it punishes misplaced expectations. That's why this phase isn't about getting excited, it's about getting prepared. Here's the uncomfortable truth. Even if the company does everything right, the stock can still disappoint you in the short term. Why? Because markets price in the future, not the present. If investors are already expecting aggressive growth, strong margins, and rapid AI monetization, then anything slightly below that can trigger a sharp reaction. It's not always logical, but it is consistent. Expectations drive price just as much as performance. This is where a lot of investors lose control. They anchor themselves to a narrative and ignore changing signals. They see a dip and assume it's a buying opportunity without reassessing the fundamentals. Or they see a rally and assume it will continue indefinitely. Both approaches are reactive. What you need instead is a framework, something that keeps you grounded regardless of what the stock is doing. Start by defining your conviction level. Not based on social media, not based on headlines, but based on your understanding of the business. Do you believe Palantir can continue expanding its commercial segment? Do you believe its AI platform will translate into sustained revenue growth? If the answer is yes, then short-term volatility becomes easier to tolerate. If the answer is uncertain, then you need to be more cautious with your exposure. Then comes risk management, which is often ignored when things are going well. You need to decide in advance how much downside you're willing to accept, not emotionally, but practically. Because once the stock starts moving against you, your decision-making becomes clouded. Setting boundaries early, whether it's through position size or predefined exit strategies, protects you from making impulsive choices later. Another key point is understanding that not all growth is equal. It's easy to focus on revenue numbers alone, but quality matters. Are customers sticking around? Are they increasing their usage over time? Is profitability improving, or is growth being driven by heavy spending? These are the details that tell you whether the business is strengthening or just expanding superficially. And don't underestimate the role of patience. Stocks like Palantir often move in cycles, periods of strong momentum, followed by consolidation or pullbacks. If you expect a straight line upward, you'll constantly feel frustrated. But if you recognize that these cycles are part of the process, you're less likely to make unnecessary moves that hurt your long-term returns. At the same time, staying patient doesn't mean staying passive. You should be actively monitoring how the company evolves, new contracts, product adoption, margin trends, and overall market positioning. Being patient simply means you're not reacting emotionally to every price movement. You're responding thoughtfully to meaningful changes. So yes, get ready, but not for guaranteed gains or overnight success. Get ready for a process that requires discipline, awareness, and a clear strategy. Because in the end, your success with Palantir won't come from predicting every move correctly. It will come from consistently making decisions that align with your plan, even when the market tests your confidence.